Time now for an in-depth look at the market news, and for that, I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, thank you for making time today.
Happy to be here.
Well, oil prices continue to stabilize, albeit at these historic lows. Wall Street was a little higher last Friday, and Korean stocks had a good start to the week. What's the story in the global markets?
Okay, well, I think the global stock market basically reflects how the region is doing as in regards to how the COVID virus is going in their region, as well as what their economic outlook for the near future looks like. So the United States, it was down earlier in the week, but it came up later in the week as some of the regions are looking to open up. The EU and Nikkei, it went down toward the end of last week. That, I think, partially reflects, especially in Japan, the situation getting somewhat worse. China and Hong Kong, well, they were mixed. Hong Kong went up a little bit last week. China went down a little bit last week. And for Korea, luckily it went up today, but at the end of last week, it went down, partially because we're just beginning to realize that the exports in the second half of the year might be hit a lot because of the global recession due to the coronavirus.
Right. Well, another asset set to go higher, possibly. Bank of America calling for gold to hit $3,000 an ounce in the next 18 months or so, driven by the Fed's reflation of the economy. The Fed can't print gold, it says. So what do you make of that, and what's your outlook?
Okay, well, it's a possibility. I'm reluctant to rule anything out so far because the COVID virus has made surprises almost normal. Things are going to levels that we have never seen before, or we have seen only in the Great Depression. So I won't say that it's not impossible, but it seems unlikely at the moment. Right now, it's near the 7-year high range of about $1,750. The market is expecting the gold price to break the $1,921 barrier that they had in 2011, right after the global financial crisis. That certainly seems possible. And during this unstable times, people do tend to move to commodities and metals like gold, but oil, it's not a good place to go into right now because the demand has fallen so much. So it's understandable why the people are going to gold investments. But still, $3,000 seem a little bit too high for me. And also, at the end of February, we have to remember that the price of gold, as well as the stock market and the bond market, all fell because all the major financial institutions, as well as companies, were seeking safe assets. And surprisingly, they did not go to gold. They went to U.S. dollar. They went to cash. Partially, it was because of accounting purposes, but still, I think if there is going to be a global recession due to the coronavirus, then there's a question on whether even gold can perhaps be seen as a safe asset. So 3,000, I think, is, I wouldn't rule it out, but I think it's going to be pretty hard.
Very interesting. Well, in the next few days, we'll have from the BOK data on consumer sentiment. What's in store this week, Professor Yang?
Okay, there's also the business sentiment report from the government, as well as the weighted market interest rate. Those are all going to tell us what the recession in the second quarter, as well as the second half of the year in Korea, is likely to be, and especially the weighted interest rate, along with credit expansion and reduction report that will come out in the next few weeks. It will tell us how the credit crunch or the money market is going to be doing, credit market is going to be doing. It's crucial that the firms remain alive, and that means we have to make sure that credit is going to these companies without too much of an increase in interest rates. So we'll need to keep an eye for that. Foreign statistics, the most interesting one is going to be U.S. GDP first quarter estimate. The Congressional Budget Office has estimated that the first quarter will fall by 0.9% and second quarter will fall by 11.8%. quarter to quarter, and then recover in the third and fourth quarter. But we'll have to see whether that estimate will turn out to be correct. Also, the Fed is going to have an FOMC meeting, interest rate meeting on Thursday, Korea time. That'll be interesting to see. Well, the Fed cannot lower the interest rate any further, but we'll have to see what kind of alternate policies they're thinking about. And then usually this is not big news, but it is going to turn out to be a big news for the next few months. The U.S. oil reserves, the amount is going to be announced on Wednesday, and depending on how much oil there is in the U.S. official reserves, that'll have a major effect on oil prices.
We'll be looking forward to hearing from you about all of that. Thank you, Dr. Young, as always.
Thank you.